This is Kerry Artek with Artek Advisory, and this is the video supplement for AgriTalk afternoon show that I'm a guest on with Chip Flory Monday afternoons, the 5-minute segment. I typically cover 3 markets, and this week, the week of Monday, September 28th, I cover a couple of the livestock, lean hogs. I give you a reminder about live cattle, which I do cover on a regular basis, and soybean meal. So it'll be those 3. This is recorded Sunday, September 27th, the day before the show. And I'm showing you a chart here. This is a weekly continuation chart of soybean meal that presently reflects the December contract. This is a volume-based rollover. And so this is really the stringing together of high volume contracts going back 4 or 5 years. And right now you can see that we had a buy signal that I posted on my daily soybean meal newsletter a couple of weeks ago above this formation at 335.5. And this is the beginning of a range of support into the upper 320s. I can show you that actually right now. This is a weekly chart of the December contract data only. It's not the weekly continuation chart. So it happens to show a channel bottom at 329.5. So you've got, really a 6-point range of support, 335.5 down to 329.5, that can absorb selling through the rest of the year into December expiration and even into next spring. This is a long-term buy signal for soybean meal. And so long as we continue trading above 329.5 to 35.5, we should continue, I think, ultimately, and by ultimately I'm talking, the timing of this is obviously a tough one, but we do have a bit of a breakout here after having spent the better part, well, actually the entire last 2 years inside of range of which is in the lower 280s to mid 330s, and now we are above that. So we should continue on to the 374.8, 373.7, let's just call it the lower 370s. That is quite possible here between now and December contract expiration. If we continue at the same pace that we have over the next 3 to 5 weeks, we may reach it. Although I think it's going to take a month or two. We've already have a negative settlement on the week. And so we are testing support now, but above which 357 even is likely via October trade, the lower 370s into November, let's say. Ultimately, spring, summer of 2021, we can push into the 396.4 to 414.4 area. And this is a long-term zone of resistance that can contain annual buying pressures if or when tested. I am holding this out as a possible long-term objective following this recent buy signal. Now, if we happen to settle the week itself back below 329.5, then that buy signal has failed, and we should, between now and the end of October, continue south into the very low 300 area, 306.3. This channel structure well suited at that point in time to absorb selling into, if not through, November trade and possibly into December expiration. Just overall, if we close the week below that 329.5 and of course 335.5, we could over the next several months continue south into the 280s once again. That is a real possibility on that buy signal failure. But right now, a buy signal firmly intact longer term for soybean meal. Let's jump to lean hogs. This is a weekly continuation chart of the lean hog contract, CME lean hog contract. This continuation chart presently reflects the December 20 contract. So this is once again the stringing together of high volume contracts over the last, 6, 7 years or so. And, several weeks ago, I think I even mentioned it on the show, but any of my daily Lean Hog newsletter subscribers are well aware of the fact that we're in the midst of what I've been still calling a 3 to 5 week buy signal, although we're a clear 3 weeks into it without any considerable upside follow through. 59.87, this descending channel top on the weekly chart that spans back over a year of activity, is our base of support. 59.87. It is dropping every week. It can absorb selling into December contract expiration, and above which I am anticipating the mid 75 area. You've got an old high here at 75.97 and an ascending channel top, which is the real target, at 75.55 this week. This is rising on a gradual basis. It is our target that I think is likely between now and the end of November, and I still think 3 to 5 weeks is not out of the question as far as the timing of this, although we do need some some secondary buy signals on the way up, which I'll not get into right now, but you can be apprised of those secondary buy signals if you subscribe to the Daily Lean Hog letter or activate a 2-week free trial in any of my newsletters. By the way, the last thing I'll say here on this, or the last couple of things, if we were to close above 75.55, or at least this channel top at the end of any week, the market takes on a clear secondary buy signal that should, over the following 2 to 3 to 5 months, result in bullish continuation into this area at 100.15. If we close back below 59.87 at the end of the week, I really am looking for, I think the upper 40s are quite possible, which is nothing more than, a channel structure that would be something along these lines, around 47.5. I think that is probable within a month or two, and from there, the market can bottom out into a later winter trade. But right now, bullish above 59.87, expecting the mid-70s. That has been a buy signal now for the last several weeks. And what I like about this buy signal in the futures is it has been recently backed up by, confirmed by the Lean Hog Index itself. This is the CME Lean Hog Index, the underlying market, if you will. And last week, this market actually skipped and jumped right over this channel top that I had been telling my subscribers that it just might contain monthly buying pressures, possibly through the balance of the year. But if we settled above it, it would essentially validate that buy signal that I just showed you in the futures market. So the Lean Hog Index, and there's not a 100% correlation, of course, between the index itself and the futures market, but the index itself is telling us it's likely to continue moving north. We've got, what is this, about 3 to 5 week move here. It could be just another 3 to 5 weeks before we reach into the 89 handle. And this is a long-term resistance area that I would call likely to be reached between now and the end of the year or sooner, that can absorb buying into next spring and possibly well into next year. From here, we can rotate south and fall back to channel support that we nearly tested last April, that is presently in the 42 handle. But right now, bottom line with Lean Hog Index, bullish above 69.58. That's for this coming week, expecting the 89 handle over the coming weeks. And finally, if you've been listening to the show at all for the last few months, you know that I've had a long-term buy signal in live cattle. This is the weekly continuation chart for live cattle. It presently reflects the December 20 contract. It is, once again, the stringing together of high volume contracts over time. And you're basically looking at, a 6-7 year snapshot here. Last July, late July it's been already, my goodness, we had a buy signal by closing of the week above this long-term descending speed line on the weekly chart, then indicating bullish continuation. At the time I was talking 2 to 3 months because we'd had some pretty significant moves off the April low. This one in particular, I was expecting the possible, upward continuation over a similar time frame, couple of months, into the 123 handle. Obviously, we've done some sideways consolidation in the interim. We've rolled from October recently into December. That's higher price, so we're moving away from this. We did retest this speed line in late August, and it held beautifully, I might add, and still maintaining a 123 handle target that I'm guessing will be realized by the end of the year. This 123.62 channel top, if tested between now and the end of December, able to absorb buying well into 2021. Now, downside, and I don't see it happening this week, we're a full, 10 handles or so north of this significant long-term support, but I just want to say that we now have ascending 1/3 speed line as well that's pretty steep based on this most recent high. And it is a range, 101.60 to 102.92, that if tested over the next few weeks, and I don't see it happening, but if so, can absorb selling through the balance of the year, through winter trade, and once again above which the 123 handle expected over the coming months, closing below 101.60 at the end of this week. Not going to happen, but if it happened over the next few weeks, then the market has indicated a good annual high, and I would then expect the market to continue south to this area, 89.25, the high of the low. It should be a pretty decent base of support. It would become, I'd say 5 to 8 weeks, 2 to 3 months, perhaps somewhere in there. If we close below 101.60, 89.25, likely I would say where we can bottom out into next spring. That is really all that needs to be said for this week's AgriTalk video supplement. So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You have nothing to lose and much to gain.